The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we got a market kind of flailing around here after the first 30, 60 minutes. Pretty much had a pop up about, 12, 13, 14 points on the S&P cash. We're up 7 points now. Pretty much given half of that back. We also, we're at 21 at 15 and change. Is gone maybe a couple points lower, a couple points higher, which is kind of really strange because today is really pretty much the end of fund buying. We're already in the fourth. Now, technically, they could go till tomorrow. And there's nothing written that says that they will be 100% invested. In fact, there are a few people, more than a few people that are in the hedge fund community and the fund community that are more than willing to wait the day after and add to their positions. There's a kind of unwritten rule that suckers shouldn't get any kind of deal on a price. In fact, they should get the highest price. And of course, all these funds have to be, 80% of them have to be 100% invested at the beginning of the month. Last 2 or 3 days of the month for 2 days of the month. And basically, we're through that today. You can make a case that at least for fund money, this is as good as it gets, which was also a great movie, by the way. I really liked it, Jack Nicholson. But no car crashes, nothing else, just people talking. But I do digress. We have seen some other movement out here that I think is very interesting. We've seen some pops in like the IBB, pretty much giving it all back. It's up a buck as we speak, but it was up more than $5 earlier. We also see kind of some systemic weaknesses in the IWM. It was up $1.40, up 70 cents now, and volume is incredibly light. We'll get to work on the charts on that. We'll have a special guest at the bottom of the hour, and we're just going to talk for a few minutes with him. Other than that, it's a double top secret. And if I said we'd be on double top secret probation. But we'll have him on at the bottom of the hour for 5-10 minutes. We also have a dollar index. It was down at 95.04, trading out at 95.40 now. It seems like the volatility is kind of come out of that. But probably what we're looking at is the markup into fund buying. And the question is, after this, what's next? If this is as good as it gets for cash coming in this market, now, is it beyond the scope that some of these fund managers are going to be told to buy at the absolute highs in the market? No. It's kind of a God-given rite of passage to screw over anybody in a 401k. And could we see a little bit of movement at the end of the day? I think we could. But what we don't have and what we haven't had since the beginning of the day in the last 3 days is significant volume, 1.9 billion shares as we start the show. And when we look at what actually happened and during the morning, again, one of the lightest volume days if we go back 6 months in the first 30 minutes. And not a lot of traction out here. The only thing we can probably say is that if you were looking for that spike top at 121, 21 that we had this morning on the S&P cash, that we're kind of in time getting into that downtrend line. So you can kind of make a case like that if you were trading at very narrow time spans. But other than that, what we have is a market that's up, given about half of the pop back up. IWM still having extreme problems. I thought maybe we'd even get more of a reversal before the end of the day on the IWM. Doesn't look like any funds getting into that. In fact, actually, funds may be selling those IWMs that it could not hold the pop earlier this morning, where more people are probably looking at the Dow and looking at the S&P to plunge that fund money in. Almost everything else, nada. We also are looking at the Apple, and I think that there's a good chance that we've seen the NASDAQ top today. And the reason why is the reversal in Apple and finding some sellers just above 130. I'm not suspecting that this one is going to be the one to short, but it certainly looks like the ability to find a bunch of people plowing into this for fund buying is probably over too. And the question is just how good a job can Apple do of buying its shares back to keep its price up? In, let's say, an onslaught, what would Apple do? Would they wait until the price destruction and then start buying back the shares? Would they try to hold the dam back and keep the fingers in dikes as long as they could? Kind of really tough to see what Apple would do. They also have a brewing problem that we'll get into in the snooze. And, of course, when news breaks here at TFNN, I'm here to fix it. And we'll be getting into that in a second. In the meantime, we always like to start off with a little bit of history.
That it's all just a little bit of history repeating.
Today, the first modern leveraged buyout in 1979 using high-yield junk bonds, a $381 million deal to take out Huda-Lai Industries and take it private. It's completed by Kohlberg, Kravitz, Roberts, and Company. Over the next 6 years, Huda-Lai produces 34% average annual return for KKR's institutional investors. Always wondered what KKR stand for. I think I've run it across it a few times. This never really stuck. I think maybe it will today. KKR, Kohlberg, Kravitz, Roberts, and Company. You'll hear about them a lot. But, of course, that led to a huge junk bond euphoric move, pretty much completing in the mid-'80s with, of course, the Michael Milken incidents, where for years people were sold worthless bonds. But there's nothing new in history. It's happened before. It'll happen again. What else do we have going on out here? Of course, William Buffett was out hawking his wares today on CNBC. Probably the most interesting thing that ever happened to me, and I know we always get new traders, so apologize for retelling the story. But I remember early on, I think it was 1998, 1999, 2000, something like that. Old Mr. Buffett was telling us all how well Coca-Cola was going to do. And, of course, when the next reporting session came out, I saw that Mr. Buffett was more than willing to dump a ton of Coke shares during that period. I figured he spoke with forked tongue, as they used to say in the racist Indian movies of my youth. But what else do they have? They have a ton of profits. In 2003, him and his cohort, Mr. Munger, were more than willing to run around and degrade things like puts and calls and other kinds of financial derivatives. He called them sewage. They called them waste. They called them worse than those things, but I can't say them on the air. But in Q1, the value of his options, he sold a bunch of them, jumped by $1.3 billion. Mr. Buffett would be one of these people that has a huge exposure if the market moves down. Of course, these are just paper gains, and Mr. Buffett expects to hold them till they expire. I think they're 2016 or 2017 puts on the market that he sold, but market would have to go down. He sold them a while ago, and, of course, a lot of decay out there. He does not have to hold them until they expire. Of course, that's what he's telling people. For all I know, he's covering them every single day today, and we won't find out. Because guess what? This isn't like big companies. He doesn't really have to report all this, the put and call buying. He does have to do when he actually buys the equity. So there's a lot more anonymity in what he's actually doing below it. But from going to calling all these options sewage to having the single biggest hedge operation in the world, it is commonly do what I say, not what I do for Mr. Buffett. Other things going on. We talked a little bit about Tesla last week. We've got the new pricing for the Chevy Volt, which is kind of one of the things that looks like competition for it, albeit it's a much different car. If you get the full $7,500 tax credit for the electric vehicle, the Volt will come in at $26,500 if you happen to live in California. Those state credits can bring that price down another $1,500 to $2,500 or $25,000. That's not a bad price, especially where they do horrible things to you in California, like the highest taxes and the highest price, I think, for gasoline there is in the nation, even higher than Alaska and higher than Puerto Rico and Hawaii. Kind of funny that you get the highest prices there. And it's newsworthy because it's starting to dip into traditional hybrid pricing territory, and actually 25 grand, probably not bad. These things don't have a very good long-term price. And to tell you the truth, if there was some new technology that came out, you know, buying one of these things with some dead batteries and replacing them with some decent technology doesn't look like a bad idea, especially since when you look at these things, they're basically a lot of electric motors. It is tough to think too far ahead other than that. You know, basically everything else is about 25 grand higher. So almost twice the price. Doesn't sound all that bad if you lived in super high gas dollars. I think we're paying, I think I paid $2.48 or $2.45 on Friday for gasoline, or Thursday, which is not too bad, but it was down there at $1.90. I wanted to get back down there. And we actually have somebody working on that out here in the market. Maybe I'll get to that today. One of the things I did want to bring up is we had some more questions in my email about electric vehicles. And you need about 3,000 watts or about 30% to raise the temperature in a car to a comfortable level if it's 30 degrees outside. That's about 30%, about 1,500 watts on an ongoing level to maintain that temperature. When we get back, we'll talk a little bit about how heating and cooling these cars affects the distance you can drive them. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, are we back already? Yeah, my timing's off here for some reason. I need to adjust my clock. Anyway, what else do we got going on out here? We were talking about the heating electric vehicles, and I thought it was just interesting because somebody asked, but basically you can look at your range, maybe 15, maybe, about 15% of your battery power is going to be used to heat or cool your trip. And so if you got 50 miles, you've got to knock off basically 10% of it. So maybe 40 miles with a Chevy Volt, which would, 20 miles there, 20 miles back. Probably not too bad if you live in a normal range and commute to work. But a lot of people don't think that. Some of the other things that you probably haven't thought of also for these electric vehicles and Tesla is heat. These things cannot be recharged when when it's very hot out here. And basically, if you've got a Tesla in Phoenix and it's in the summertime, you just the system automatically won't charge your batteries because it'll fry them. So probably not a good place to get one if you're in Alaska. Probably also not a good place to have a Tesla, as of course 40% of your battery life can be diminished by 10 10-degree temperatures outside. Continues to be a very interesting technology. Maybe for Florida, we have pretty decent weather. And actually, if you're talking about something like 50 to 90 degrees for the most of the time, that's probably about in the sweet spot of getting the largest range out there. But again, not everybody lives in Florida or California. It's much tougher in very hot climates like Phoenix and middle of the summer in Las Vegas. And of course, in the northern climes, the temperatures can severely limit the range. In fact, the Tesla has battery heaters to warm up the batteries when you're driving around. But I do digress, but just thought that was interesting. Other things going on. Cisco is going to get its new CEO. This guy has been ensconced, the current CEO, like a Alabama tick. There was no way getting him out of the board. He hadn't done a lot. What he has been able to do, though, is make it his own personal cash box. Very interesting to see what's going to happen in Cisco. I noticed that it was down a little bit pre-market and at the open, but not a lot of action for a new CEO. My guess is that old Mr. Chambers has been fattening this one up since it's mostly been what's in it for him since he took over the range. He's been there quite a long time. He's I wouldn't say that he's done anything outstanding and or hasn't been horrible, but mostly he's run it as a fiefdom for himself, at least in my opinion. Apple is reportedly in talks with music labels to discontinue free music streaming licenses with Spotify. And it's, to me, this is a warning bell for Apple that they are dangerously close and have been in the past. But this would be something that the Justice Department may fry Apple on, and that is using their power as a monopoly to push somebody else out in Spotify. There are some very confusing laws about what you can and cannot do. If you are specifically somebody like Apple telling them to get rid of Spotify, it brings up a host of problems in anti-trade legislation. At best, at worst, you could be talking about Apple being forced to split up. And that would be very interesting to see if they made them split up the different divisions and went after them for antitrust. I suspect that they're getting awful close. The question would be, especially in Europe, whether they act first on this. I use Spotify a lot, like it, but there are a lot of issues where Apple is getting a lot of extra rope to hang themselves on doing some of this stuff. So you have to keep an eye out on it. Other things going on out here. As a programmer, I know just too well that you don't know what people are going to do with your code. Boeing has apparently an issue where if you leave the jet on for 248 days in a row, which I don't think most people will do, it can become problematic. As far as I know, the longest jet has been up without being turned off has been 3 days. So probably not a big deal. When we come back, we've got a special guest at the bottom of the hour.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'll have to see my broker, find out what he can do, 'cause I'm in the market for you. There won't be any joker with margin, I'm all through, 'cause I want you outright, it's true. You're going up, up, up in my estimation. I want 1,000 shares of your caresses too. We'll count the hugs and kisses when dividends are due, 'cause I'm in the market for you.
And a big hit in 1929, I'm in the market for you. Can you think of a more, a bigger signal of impending doom in the stock market than writing songs about your intended and mashing it up with the stock market? Well, we have our special guest on today, and it is Basil Chapman. How you doing today, Basil?
Hi, Dave. That was fabulous. I had not heard that recording. That's fabulous. That sums it up perfectly, because in 1929, Happy Days Are Here Again was written, and then it became an immediate hit. So it's fascinating because this one is even more appropriate. And of course, in 1932, one of the most, I wouldn't call it the most popular song, but the song sung the most was Brother, Can You Spare a Dime?
Yeah.
So, so this is going to be very interesting because the patterns that I'm looking for, chart formations, I've already given one webinar on the parts of the market that we are looking at, the socio-political and the economic parallels of the 1920s. And I'm following this up with where are we now, almost 3 months later from when I gave that particular webinar, and what is increased in my estimation to say that the parallels are just markedly the same, and what is very different. And just on a pure, I'm going to also try to do as much as I can on a purely technical level, because, you know, we can theorize as much as you can just have as many theories as you want. But the most important thing is, none of us can predict the exact top of any particular market looking in the future. And if we do, it's based on a whole bunch of indicators. And if it misses, then nobody says a word. And if it hits, then you get talked about for the rest of your life. So,
I was going to say the biggest trades ever have been shorts by individuals. In 1929, it was Jesse Livermore who had the single biggest, I think, still adjusted for dollar trade. When he made $300 million that year, and
unbelievable, and that was $300 million in 1929 dollars.
Yes,
it's incomprehensible.
Still, I think it's still the biggest one. Although there's a guy yelling and screaming that he had a bigger one that he shorted natural gas in 2005 or 6 and made $1.6 billion as an individual.
Bad.
So not a bad payday out there. Now,
you know
go ahead.
I was just going to say what's very interesting. You brought that up. They're always different characters, but the conditions are always the same. So you might be talking about the dark pools in those days where certain funds were put together, and the layperson could finally buy a basket of the most popular stocks. So, and they were, in those days, you had Bernard Baruch, you had J.P. Morgan, you had Joe Kennedy, who, of course, who made a fortune on the way down, was heavily short, and then became the head of the SEC. Doesn't that always work out the same way?
3 or 4 years later, yes, he's the They needed to get the fox to guard the
absolutely, because the fox knew the tricks, today. Right? So this is a very interesting period. I'm going to be delving. I only have 45 minutes, so I'm going to be going through different areas. I haven't quite finished, but this is one of the slides that I'll be showing here. Just comparisons between 20s and the 2010s. The skyscrapers, the Empire State Papers were signed exactly August of 1929, right at the top, because that. Long Labor Day weekend was the top at 386 in the Dow. And of course, the Dow came down to 40 in 1932. And then, of course, the bank legislation came about, and it was one of the biggest market days ever. I think it was a 15 or 17% immediate gain in the market. Well, they put in the bank regulations when? It was too late. 7,000 banks had already folded. Auto engine size, you had the most incredible engines that were being built in 1929. It actually continued with Duesenberg and other companies into the 31, 32 period. But we're up to 1,000 horsepower already in the engine size. We've got the China Sky City is about to be built, one of the world's tallest buildings. We haven't announced it yet in the United States. That's what I'll be waiting for. There's innovation. There was Lindbergh did his flight across the Atlantic. Interest rates. Now, this is going to be very interesting. I wonder if I can. Yeah, let me find it. Right here.
Did you see that they're planning a electric plane flying across the Pacific today?
I never. Well, isn't that interesting? Because I just typed in. Because I haven't seen it yet, and my speculation was that there would be the longest solar flight to be the equivalent of
It's going to take them 5. It's going to take them 5 days. They had to. The weather wasn't with them, but they're leaving from China, trying to fly to Hawaii. It will take them 5 days in a solar-powered plane.
Isn't that amazing? But
so there's always these parallels of people doing all kinds of stuff.
All crazy
like
stuff.
Like you said, at the top of markets.
And this is the interest rate, the reconstructed Darwin rates that I got. It's the U.S. long-term interest rate and the Dow Jones Industrial Average going back to 1700. Of course, it was only 1890 that the Dow really came about. So this is reconstructed. What is really interesting, I'll do this so that you might be able to see it. So interest rates are quite high. They're over 8%. Then they start to come down. They come down. And then in 1900, so they're in a bit of a bear market. And then 1900, they bottom. And they rally to 1929. And here's the Dow. Starts off down there. This is reconstructed. And it rallies all the way to the high of 386 in 1929. So the parallel between interest rates and the market, there isn't a direct, I cannot get an exact direct link except to say that market tops themselves, like in 87, like in 2007, are sometimes triggered by the push of a sudden burst of energy and interest rates going higher. But where from? Sorry.
Yeah, I like to get. I'll let them go through your webinar for the whole thing. I wanted to ask you a couple of questions, though.
Yes.
There was to me, the book that I remember, after the 2000.com blow up, I went through probably every book about the 1929 bubble and read them all. My favorite of the bunch was a brief history of financial euphoria. But you said that you had another book that you liked too about that period. What one was that one?
This is a book. It's called The Year of the Crash by William K. Klingaman. Klingaman. It's published by Harper and Row. I don't know if it's still available. It is a lot. You know, Galbraith is a fabulous book, and he's got a lot of insight into it that
I like that it's short and it doesn't use any big words.
And it also has anecdotal stuff that makes you part of the whole scenario.
It certainly does. But, I mean, if you're an engineer, you know that normally you do things and you break things to find out exactly what it is. If you're a physicist, you use an atom smasher to find it, what's inside atoms. If you're Boeing, you keep bending the wings until you find out when they actually break.
When it'll break, right?
And
so,
the thing in, I guess, these is that they're like a rubber band. It's really hard to know exactly when these things are going to break, but if you keep pulling on the rubber band, it will break.
That's absolutely correct. So what I'm going to be discussing is what is missing from that. And one of the key factors is there a dissipation of ebullience? Is there, in other words, in January of 2000, the Dow made its all-time high. But it was March of 2000, the S&P and the NASDAQ, which was called the over-the-counter market, made their all-time highs. The NASDAQ essentially sucked in every single penny that it could that would normally historically have gone to the Dow, and instead it went to the NASDAQ. And I'm looking at this and I'm saying, wait a minute, the whole Northeast is experiencing. I'm speaking to friends of ours whose children are in Brooklyn and Manhattan and other places, and to a T, everyone has just said this month that the rents have been raised by $200, $300, $400, $500, $600, $700, $800 a month. This is unbelievable.
Where's this at?
In Brooklyn and Manhattan.
Okay.
So, and in the Northeast here in Boston, there's a housing shortage and the prices have just gone through the roof. So I'm saying to myself, let's look at this and see whether or not this is being split. Like the Dow didn't make its incredible high that I thought it would go to, which is at now, which I thought in 2000 would have got to 17,000, 18, 19. Instead, the NASDAQ usurped all that extra cash. There were grandmothers taking out they're selling their bonds, the safety of bonds, to go into AOL or, you know, one of the high flyers. So is it happening now that we're seeing real estate, especially since what's happened over the last 10 years or so, become the Dow, in that it's usurping some of the money that would normally go into the stock market, so that maybe we don't get that kind of big hysteria before we have a pretty substantial decline. So these are the things I'm going to try to analyze, but it's even better to be able to say there are certain things you can look for. Skyscraper theory, Petronas Towers right at the top, the Burj Dubai, they changed the name right at the top because that was the actual peak right there. It just never fails to happen. Empire State right at the top. So I'm anticipating the same sort of thing could happen here. But most importantly, we haven't got the the kind of hysteria. I remember playing tennis at the indoor tennis, and from court number 6, you would still be able to see the ticker of the stock market because everywhere you went, the tickers were on. I remember walking past a barber shop, and he had the stock market, the CNBC running at the bottom there. So we don't have that now.
Yeah, one of the things I was always interested was the Kennedy deal, where he basically said, I think it was either the shoe shine man or his cab driver asked him what he should buy in the stock market, and that's why he went short. Did you ever find out, or have you ever heard or seen if that was true or if it's just apocryphal?
I've heard people say that it's anecdotal, and I've not seen any reference that is just a direct quote. So, but it's apocryphal. It's telling us a story. And I remember the stories of 2000 when people said that their cab drivers were telling them what to buy. So I think it's really, I can believe that something like that happened. And I wouldn't be surprised if it did. I had a bunch of
programmer friends, and almost none of them were programming. They all had, of course, the latest and greatest thing, which was being able to trade across the internet. And they were all in front of their screens trading stocks instead of writing code. That was kind of easy to tell.
That's right. And I remember at the time saying, I wonder how much work is getting done in the country. I can't believe that anybody's actually doing any work. And remember, that was right at the period where there was a maturity in the technology. So you actually had you could quietly be looking at your computer, as opposed to other periods like 1987, where it was very, very different. So
I've got this, and I wanted to bring it up before we get out of this segment. But this is from A Short History of Financial Euphoria. But I wrote this down when I read it in probably right after the .com blew up, because I was very interested in bubbles at the time. But he had these basically 9 points, and I'll go through them here. Maybe you want to comment when I'm done. Number one, the inventors basically have a similar formula of some form, and that is that there's some kind of new financial idea. In the case of the .com thing, it was, basically clicks and everything other than real money. The inventors are declared geniuses. After the initial run, additional leverage is encouraged and provided. Anyone that says the bubble is ready to burst is attacked and ridiculed. The bubble bursts. The public never blames itself for its greed. The geniuses are prosecuted, exiled, or killed. A recession or depression occurs that lasts years. Politicians pass new worthless laws, and a generation comes along and it occurs again.
That's right. Whether it was the invention of the telescope, it doesn't matter what it is. That happens over and over, right?
Yeah.
But I love that. From here, I'm looking at your screen that says the investors, the inventors are declared genius. But in fact, you could put investors instead of inventors, right?
Everybody's a genius on the way up. Anyway, when is your deal? It's tomorrow night?
It's tomorrow night at 5:30 to 6:15. We'll probably go a little longer, and it is the second of a series, so they will get the previous one as well, and they'll also get a month of my newsletter for free. So it's a win-win, I hope.
Well, good. Go to the front page of TFNN and check it out. Sign up for Basil's. I think anybody should know about basically financial euphoria, which is probably best description of 1929. So check that out. Thanks for coming on, Basil.
Thank you, Dave. Have a great evening.
Okay.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
If there's one quote out of the brief history of financial euphoria from Galbraith, was this one quote: "There's nothing in economic life so willfully misunderstood as the great speculative episode." And I think anybody that trading should really know and be able to identify when they are in some kind of bubble, irregardless of what Mr. Greenspan says, that you don't know that you're in it. I certainly knew I was in it in the dot-com bust. I knew that at least the charts told me, and I hadn't been through one in housing, but I certainly saw all those stocks on May 5th, all double top with half the volume in the banking sector and in the broker dealers and Fannie Mae and Freddie Mac. If you go back and look at all of them, what is it, May of 2007 or May 5th of 2008? I can't even remember now. I'm going to have to go back and look at the charts. But a lot of times you're going to see the big movements. At the time, I didn't know. I had some shorts in there. A lot easier figuring out that the March 2009 low was some kind of low to be bought, and the kind of low where you can make 300-400% on an equity with no sweat, and actually in the maybe 3 or 4 weeks, there's some massive wins out there. Knowing that you've got severe displacements in the market, egregious displacements in the market is something that you always want to know. I don't have a lot of time left here. I am going to say, maybe bring up a little bit of my conversation with Tom O'Brien on Friday. We were talking about Windows 10 coming out. Over the weekend, I got Windows Office 2016 installed on my machine. Actually, I've got now 3 different machines running Windows 10 out here. And I have to tell you that I've been pretty much using Windows 7 since it came out and never really thought much about using Windows 8 or 8.1. They were interesting technologies, but nothing I could use every day to trade. This seems to be a great combination of additional features and a common interface from a phone to a tablet to my convertible, which I guess I have in my bedroom. I'll bring and show it tomorrow. But everything's working very well. In fact, it works so well that I may just hop even to the pre-released versions of Windows 10 to start doing all my stuff on. There's a couple of reasons why I would jump early and not wait, mostly because some of the tools that I want to build for my trading and other things would be a lot easier. There's a lot of additional tools, stuff that people have given. But Windows 10, of course, is going to be free for the first year. I was talking to the engineers in there, and basically we've got about a year, and they're going to push everybody into Windows 10, whether it's Windows 10 for everything else. But it's going to be very difficult to use older stuff. And I'm going to try to get at least a little bit ahead of the power curve on that for trading and making sure I've got a stable platform to trade. There's some very interesting new features out there. It's kind of nice to be able to use the tablet mode. And there's one thing that I do a great deal of, and that's look through news articles and technology. And the combination between news readers and OneNote from Microsoft makes it immediately probably will save me 2 or 3 hours a week of work, which is going to be a big deal out here. Anyway, we've got a market that's kind of flipping and flopping around out here. Not a lot of stuff. Again, this is all about fun buying. And if we don't get any, at the end of the day, this may be as good as it gets. The volume stinks. 2.15 billion shares. Bring out the fire extinguisher. There's something going on out here. Hang on for Tom O'Brien for the next 2 hours. And again, so when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.